Welcome to 2025. Man, it's we're already on the second week of January, but it's good to be back. What's happening in the markets? What's happening in the world? It seems like we kicked off the year running with just a bunch of really volatile, uh, not so good things. Got the fire, got several attacks. Markets still somewhat holding up. What are you guys focused in on this week?
Happy New Year, by the way, everybody.
There we go. Some positivity.
Yeah, let's
There
start
we
with
go,
a positive. Happy New Year.
Happy
that
New
may
Year. We had a big 2024. Yeah, I don't know. I'm just like, it's been a fire hose of shit over the past week and just trying to like stay engaged and yeah, just roll into this year with big expectations.
I sorry, there's a little bit of a delay, but I saw a funny meme and it said, I hope 2025 is full of precedented events. And it's calm. And I feel like the first few weeks has not been calm and it's just been a lot going on. So it's been interesting.
Yep. So hope everybody in California is safe. I know a lot of people have lost a lot of their stuff. We can talk about maybe what the cause of that was, or what the lack of action was that made that even worse than it maybe could have been. Trav, what's up in your world?
Man, we're hunting trades for 2025 already. And, you know, I figured it was going to be a little volatile to start. Had a lot of factors coming in at once. You know, the new Trump administration coming in, that's, you know, just a week or so away now. And so that's going to throw a lot of uncertainty into an already uncertain mix. You know, we've also got stuff happening in the bond markets. It's affecting stocks. And we also had, you know, a bunch of interesting thematic sectors and stocks running, like quantum computing stocks and robotic stocks and nuclear and space stocks towards the end of the year that things were getting quite frothy. So we've seen a lot of that kind of come back down to earth a little bit just recently. And yeah, so things are very interesting out there in stock world. I think 2025, unlike 2023 and 2024, is going to be a lot more about alpha and picking your spots than it is about just riding a massive market tailwind to 30% annual gains. You know, I think the strength that we saw in the indices in 2023 and 2024 could be hard to repeat in 2025. So that's why I think we'll find pockets of outperformance. And so you got to be active in hunting those opportunities and getting your timing right when, you know, things are freaking out or markets are freaking out. Taking advantage of those opportunities, I think will be critical again in 2025.
Yeah, I think just to your point, taking a look at the interest rates here, as of today, so today's Friday, January 10th, we've got rates on the 10-year that are back up in the high fours, back to the highest levels really since November of 2023. So that I think is throwing markets for a little bit of a tailspin. We've also got Bitcoin that has been over under the 95K magnet here. For you guys watching the video, you can see going back to November of 2024, just a lot of over under kind of choppy price action as we've been consolidating now for about just shy of 2 months. And then we've got the stock indices that have been pulling back over the past couple of weeks. But when you zoom out to Trav's point about that 2023 and 2024 year, these were both pretty massive years for stocks. But we've got oil up pretty big today. We've got the US dollar that's up big. We've got gold that's up big. We've got rates that are up, and Bitcoin is even popping. The only thing that isn't up is the stock indices. So, you know, that just makes me think, like, is this a function of like just fear of higher inflation coming back? If so, do you guys think that's going to be the case? Is 2025 going to be the reinflation year, or is this just a temporary bump?
Yeah, I think it's more of the latter. I think it's more of a temporary issue. I really don't buy the we're in the second part of the cycle of rates skyrocketing, and that, you know, we're in for the next inflation wave. I just don't buy it. I also don't see it in the longer term inflation expectations numbers. So it seems to be more of an issue of the market's repricing. You know, the markets got too aggressive in pricing in too many Fed cuts. Now they're kind of walking that back. There have been a little bit of, slightly higher than expected inflation prints and jobs prints in the last 2 months, but there's still categories of inflation that are still cooling, particularly areas like housing. So I really don't. I'm really not concerned at the moment. I mean, I think the reason for all of this has been economic strength, and so overall that's a good thing. We're kind of hitting the high end of the Goldilocks zone, so to speak. In terms of the soft landing of the economy that we've been talking about for the last 12 or 18 months, we're just starting to push against the higher end of that again, and so the higher rates will bring that back down. It's like a self-correcting mechanism. I think we talked about this like 2 or 3 times last year when this happened, when rates went to 5% on the 10-year and then things cooled back off. And so I think we're just going to see another wave of that. It's due to mostly economic strength, which is mostly good news. And inflation expectations don't look like they're running out of control. I know some people are worried about the whole Trump administration and what that could mean for budget deficits and inflation, but there's still a lot of unknowns there and a lot of things that will offset each other. So yeah, as it stands today, I'm not actually that worried, and I'm more kind of just rooting for stocks to sell off more, just so we can buy them on discount, because I think it'll be an overall pretty solid economic year for the economy in the U.S. So yeah, I'm not too concerned.
Trev, to add to what you just mentioned, housing, that's kind of been the big pain in our sides with inflation. And if mortgage rates aren't coming down because yields, the 10-year yield is still up and rising. So mortgage rates aren't really budging a whole lot. They're down from their peak slightly, but 7%. You're looking at almost 7% for a mortgage. So housing is probably going to continue to be slower, I would imagine, which will help the inflation picture in the face of strong economic activity, job strength, unemployment being low. Do you see anything wrong with that, thinking that, like, yields being higher, it'll kind of tame the housing market, even though we don't really want that, but we also don't need the housing market to be very strong right now, it seems, because other things are working. Obviously that's bad for realtors, that's bad for mortgage lenders, but that's kind of my thinking, is maybe the housing piece will keep things tame in the face of stronger than expected a stronger than expected economy.
Yeah. I mean, I think that's right. Like we're we're in some ways, like you want to root for like higher home prices and a healthy housing market, but like you said, like right now, it actually like would hurt us more if the housing sector of the economy is on fire. So we don't really have that. We've seen weakening existing home sales for more than a year now. Mortgage rates are back over 7%, even though the Fed has cut the federal funds rate by 100 basis points. So I would like to see, it'd be great to see kind of a normalization level, like where it's not like the housing market is just dead and it's not like the housing market is on fire. Like if we could find that equilibrium this year, that'd be great, because, what we'd love to see is, say, like mortgage rates at like 5.5 or 6%, and a housing market that's recovering a little bit, but that's not totally on fire. But yeah, a lot of other areas of the economy are doing well. Stocks are doing well. Crypto's doing well. The service sector is doing well. And so that's helped offset any of the weakness in cyclical sectors like home building and housing. So if that continues, I think we'll be fine. But again, what I would ideally like to see is more of a normalization of the housing numbers this year.
Yeah, that makes total sense. And then is this a less seen scenario where the Fed is lowering rates into, I don't want to call it a strong economic environment, but it does seem like the Fed is lowering rates into a pretty good economic environment. Have we this before, or is this kind of a unique scenario?
It's definitely a little bit unique. There's a couple of times in the past where that's happened. I think 94 may be an example of that. But we got to remember too, like they were raising rates into a weakening economy, and so like we're kind of getting the flip side of that now. Like they I know it seems weird to a lot of people that the Fed would be cutting at a time when the economy's okay. We actually don't want them responding to an economy that's rolling over too much, right? So like we don't want them to wait so long for, say the economy to collapse, then to start cutting rates. We actually do not want that. So this is okay. I think it's okay that we get some rate cuts, measured rate cuts at a time when inflation's cooling, but the economy's okay. I'm okay with that. Again, soft landing, kind of Goldilocks. They do have to thread the needle properly, but I think they've done a decent job. I've been critical of them at times, and I think maybe they get a little bit too swayed by things that are happening in real time. But overall, I think they've been pretty good about trying to look forward a little bit and not get too swayed by GDP numbers, because that's not really their mandate. Their mandate is full employment and then containing inflation. And so inflation numbers are not out of control. So even though growth is good, like inflation is not spiraling out of control. So I think it's okay that they've cut rates. The real interest rate in the economy got too high, frankly, last year at one point. So they needed to be cutting, given where CPI had trended down. So yeah, I mean, overall, I think they can't wait for the economy to collapse before they start cutting rates. And so it's fine that they cut rates as long as they're not cutting too quickly. And right now they're talking about a pause at the January meeting. That's what the market is pricing in. So all this honestly looks quite healthy to me. Yeah.
Awesome.
So let's take a look at some charts. One thing that I've noticed over the past couple of quarters, I guess, really for most of last year is there was a lot of correlation between stocks and Bitcoin. And so going into the new year, one thing that I've noticed is, on I think it was the JOLTS numbers, the jobs numbers last week that caused the stock market to panic, and then Bitcoin kind of went down with it. So it crossed back up above 100K. And then on that news, as stocks came down, it kind of pulled it down with it. And so right now we have this massive price magnet around 95K to 100K. And so one thing that I'm just looking at this year going into because the first couple of weeks of the year can be weird with rebalancing and tax things, and it's just hard to get a gauge of momentum initially on the first week or two. But with stocks pulling back and Bitcoin kind of holding up today, one thing that I'm really looking for signs of is Bitcoin to start really trading with a mind of its own. And so taking a look here at the Bitcoin NASDAQ chart, this is where I'm putting a lot of focus, is like if Bitcoin can actually get some momentum above stocks, kind of like we saw back here in October and November. That's where I think we'd get some just real capital flow back into Bitcoin, because over the past several months, Bitcoin and stocks have just been kind of moving in sync. So that's really what I'm looking forward to, is just kind of watching that and then seeing if we get the second half of an altcoin season, which has definitely slowed down through the holiday period. Very typical for markets to kind of slow down before Christmas and through the new year. And so one thing that I'm looking for is signs of a strategic Bitcoin reserve actually getting implemented. So I think that's something that a lot of investors are somewhat pricing in on the Bitcoin side, if it actually comes to fruition, which I think that would just be like throwing gasoline on the fire of this bull market. What about you guys? What are you looking at charts wise, momentum, any kind of plays you want to pull up or sectors you're looking at?
I will say on the S&P, I've been watching this trend line of support that basically gave us a fake out breakdown previously, and then finally today we're getting a confirmed breakdown of that support. So my thought is, if this can, every correction or dip has been just bought up very quickly, and I don't know if this is going to be the same thing or if the momentum will shift, but I'm looking for a 200-day moving average test on the S&P 500 daily chart. I think that we probably won't get all the way there, but just doing some technicals, if we get, my target is pretty close to the 200-day moving average. So I'm going to be watching this breakdown in the S&P to see if we get some follow through. And if we do, I'm looking at that 200-day moving average as a target zone for, potentially really starting to add positions, allocate capital, take trades, things like that. So,
yeah, I mean, intraday, you're actually getting a bounce off of the 100-period moving average. So that has held for most of the dips over the past year. So yeah, I think, going into the weekend, it'll be interesting to see if this can hold. And then do we wake up Monday and have a big V bottom bounce? Or to your point, do we get more of a kind of a run similar to back in 2023, kind of in the fall, where we did actually tag the 200 and actually got below it a little bit. But yeah, I mean, this bull market's just been going for a solid 2 years now with really only a couple of little dips. There hasn't been much chop or consolidation. It's just been a lot of runs and then retracements and extensions to the upside. So I do think we're at kind of a line in the sand here on stocks, which also correlates with this 95K or excuse me, 90K support on Bitcoin, and 95K is kind of the magnet, right? Where we've just been kind of going over and under it. So yeah, I'm looking forward to next Monday or Tuesday to see, yeah, do stocks hold up at that 100-period moving average, or do we get a deeper pullback? It looks like the Russell is actually at the 200 today. So the Russell 2000 obviously showing some weakness. The NASDAQ not quite at the 100. So it's definitely kind of a mixed bag there on the TA front.
Yeah, I'll kick it to Trav and see what he's eyes on.
A lot of stuff to start the year. Last year I mentioned this a little bit earlier, but there was this interesting sector theme rotation, particularly among sectors or themes that are kind of futuristic. So, AI was a big theme throughout last year, but really in the late part of the year, we saw quantum computing stocks take off. We saw robotic stocks taking off. We saw nuclear stocks taking off. So I'm watching sectors like that. I'm watching sectors where things have not quite popped off yet like that, where we could see a rotation if we do get back into a bullish environment, especially perhaps maybe later in the spring. I'm looking for sectors like, EV battery tech, solid state battery tech. That could be an area where we see some pops. Anything related to AI agents, that's a big theme for the year. So looking at a few stocks on that front. We have Roaring Kitty tweeting again. So there's stocks like Unity and GME that we're kind of watching from quietly from the sideline, and then or not on the sideline in some cases. And then, areas that we talked about before, like Chinese stocks, they're back in the dump. After a massive quick rally, the rally faded once again, and a lot of pessimism from Western investors over that. But I'm still of the mind that this is going to be a very interesting sector in 2025. So we're watching that one. Areas that are beaten up, of course, healthcare, cannabis, areas like that. Wow, just kind of watching to see if there's anything that's gonna happen to change the current trends there, and maybe there'll be something to hop on. Energy, of course, added a little bit to some energy holdings late last year, which looks like it was well timed. So we'll see if the current strength in energy stocks has any legs to it, because energy's been a poorly performing sector for the last couple of years, but we're going to see if that changes this year. Of course, crypto and MicroStrategy, Coinbase, those kinds of stocks on the stock side, watching to see what those do in response to what's happening in the crypto market. There's also kind of unique things happening there, like MicroStrategy is talking about potentially doing some preferred stock offerings, which is kind of a new instrument they want to use to potentially raise more capital for Bitcoin purchases. So we're looking at that among many other things. I'm hoping to get more fully deployed on some of my portfolio cash here if we do get a bigger correction.
Yeah, well said. One thing I'm looking at is Bitcoin dominance is kind of at this little equilibrium point to where, if we see Bitcoin dominance creep back up above that 60% level, I think that will be bearish for alts, and we'll be back in Bitcoin season, where if this rolls over and we see Bitcoin dominance start to fall off back into the low 50s, that's where I think we'll see, some of the alt indices like Total 3 maybe get another leg to the upside above $1 trillion market cap. I think the meme coin space is still got legs. It's definitely slowed down a little bit since last quarter, but yeah, I think we're just kind of in this holding pattern. What do you guys think of this idea that markets and investors are really just waiting to see what happens during maybe Trump's first, I don't know, 30, 60, 100 days in office, or what inflation does here? It just seems like there's a lot of people just kind of, even like on the market sentiment side, it's not extremely bullish, it's not extremely bearish, it's just people just kind of waiting.
Yep. That's exactly right. That's a great way to characterize how I think the aggregate sentiment feels right now.
Cool. Yeah. Okay. Well, yeah, I mean, that's kind of a way that the years usually kick off, is like, first week or two is a little bit slower. People kind of getting back in the swing of things. And yeah, that's really what I'm looking at, is just seeing what Bitcoin and stocks do over the next few days going into next week. Yesterday was kind of markets were closed for former President Jimmy Carter's funeral, which was kind of a strange, like, midweek closure that doesn't really happen that often. So volume's been a little bit lower this week. Something else I've been looking at that I thought was pretty cool was NVIDIA's announcements at CES. Did you guys get a chance to look at those?
Mm-hmm.
Yeah. What'd you make of that?
I thought, the market seemed a little bit disappointed. There wasn't anything, I guess, super groundbreaking. The interesting thing to me that happened in the AI space, in the last week or two, is like Sam Altman saying that they see a path forward for AGI, which, I'm not sure I buy, but is interesting. But I think, NVIDIA talked about like their own AI based computers, which could be kind of a unique new product, AI PCs and things like that. They got their new 50 90 line, 50 90, 50 80, 50 70 line of consumer GPUs that are based off the Blackwell architecture. That kind of to me seems a little bit kind of incremental, nothing groundbreaking there. Obviously, they got a lot of stuff in the works with partners. They talked down quantum computing, but they talked up areas like autonomous driving and robotics. So I think certainly there's a lot of excitement there brewing. And I think that's why robotics in the stock market too could be an interesting theme for this year. There aren't a ton of ways to play it, but even like the crappy little micro cap robotics companies were popping off 2 weeks ago. So I think those are areas to watch, for some potential big upside, even though, again, I don't know that most of those companies have much quality or even much of a future, but they're what we have to trade, or they're what we have to trade on the stock side. So, but I am also interested in how AI is kind of bleeding into crypto. I mentioned briefly like AI agents, and I know we're probably going to talk more and write more about that this year, but certainly one of the hot areas of the meme coin and crypto space has been like AI agent coins. And then, AI agents being built that kind of autonomously either buy coins or do things like make content. And so that's kind of an area of intrigue for me that I'm just going to be following closely. I don't know, Chris, have you looked at those much? Have you followed that space?
Yeah. I mean, I think AI agents is definitely the biggest theme right now, and everybody's like, "Oh, how do I leverage myself times 1,000?" And we'll see what actually comes out the pipeline this year. I think it is going to be huge in some ways. Something that I'm even more excited about, because I just hate traffic, is the autonomous driving. And I recently posted this video where I had my first Waymo experience. So yeah, this was the fully autonomous car without a driver. It was super weird getting in the back and just like trusting my life with this thing. But it worked, and it went through some busy roads. It made like one little mistake where it kind of clogged up some traffic, but nothing dangerous. And I was leaving a meeting here with my buddy, who he just bought the new, is it the Model X, the one with the doors that come up the side? And he was talking about just how good the latest version of FSD is. He's like, dude, I don't drive probably 90% of the time. He's like, I trust it that much. So I know we've given Elon shit a lot over the years for him saying that FSD is like next year. And he's like, dude, it is pretty solid. And he's like, the hurry mode is actually really good. Like, I don't feel frustrated or like I need to take over. And we were just talking about the difference between like Waymo, with the LAR, where they have to like map out an area so well, and it's exponentially harder for them to grow their I guess drivable roads. Where Tesla, it's like the benefit to having just the camera system is you can basically go anywhere for the most part. So I don't know, Trav, I know you've done a lot more research on it than I have, but have you had any difference in opinions or any thoughts on it over the past couple of months since all these upgrades have come out?
Yeah, I mean, I think I've long said that people were underestimating Waymo in the fight for autonomous driving just because they had been so quiet. But Waymo having been under the wing of Google and having the benefit of, like Google Maps and Google's mapping capabilities is certainly a benefit. Google and Waymo taking a few different paths there as well, right? Using LiDAR where Tesla doesn't, using more sensors. Obviously, the cost of the car is a lot higher, but just integrating more pieces of data, I think, is a benefit. And so I think the real knock against Waymo has been, well, why aren't they rolling it out more aggressively? Can they gather as much data as Tesla? Well, I think that's starting to change, and I think the sentiment is changing with it, because now you're seeing Waymo start to roll out service in more cities and more areas. And so with that also comes obviously a lot more data, and just a lot more sophistication. And so I think both Waymo and Tesla will be successful, and the market's already starting to kind of price that as like this could be a 2-horse race there in the US for a while. I do think there's going to be a lot of regulatory setbacks that people are still overlooking, particularly when you start to get into like autonomous cars versus the ride-hailing companies, because there are a lot of drivers that are making extra income or making their full-time income off of Uber and Lyft. And so there's going to be some pretty big fights in certain cities and states from that. When you start having displacement of Uber and Lyft volumes, which you're already starting to see in areas like SF and even potentially Phoenix and Austin, this becomes a bigger issue. So it's not just about, are there accidents, which will be their own issues, but now it's, they're starting to steal jobs and income from real people. Then you really start to get into some thorny regulatory fights, I think. And you could argue actually that Tesla's in a better position here, because you've got potentially people still manning the cars, or at least being in the cars while the car is doing most of the driving. So there is a little bit of benefits. So there's some pluses and minuses. I think Waymo, I think, could end up being a little bit more trusted just because of their slower, safer approach and having more sensors, while at the same time Tesla is going to be probably more ubiquitous and maybe have more of that hybrid approach. And so I think both can do well, and it's going to be a lot of fits and starts, but I think we're finally starting to reach the scaling point. And I'm really interested to see if Waymo comes public in the next year or two, because they're going to need a ton of capital for cars as they build out the service. So I know a lot of people are already saying that they love Waymo way more than Lyft and Uber. And so I think we're on the cusp of these things finally scaling.
Yeah, man, I think it's just so much better not having to wait for a human or deal with the complexities that come along with that. And it was just kind of cool, like having the car to myself. I turned the music up as loud as I want. Didn't have to, I guess for like some females that they're going to feel safer in there. And I don't know, Nick, what would you trust it?
I mean, I definitely would feel safer driving in that versus getting in an Uber or Lyft. As a woman, I don't know. If you're not a woman, you can't understand it. But I think that's a plus. I think I would trust it eventually. I mean, little trips around town, like in Austin, going just from, not too far, I think is no problem. I'd probably worry a little bit more when it comes to like interstate driving, but I don't know. Maybe that's safer, actually. I don't have much of a educated thought around it, but I definitely am looking forward to it. I also think it's interesting. The first thing I said to you, Chris, I was like, man, social connections are just dying. Like all this stuff that I'm seeing on CES and all of the things that we're starting to see now, driverless Ubers. It's like, are we even going to really talk to people much at some point? We talk to our AI all day. We talk to nobody in our Ubers if this happens. It's just interesting to think about what happens with social connection in the future.
Yeah, man. It's the movie Her. I mean, it's a little dystopian. It's a little creepy, and especially the younger generations. I know we've talked about this, but just seeing how they struggle with social interactions sometimes, it's very weird. So, Nick, I wanted to ask you about the tax situation with crypto in the US, and if there's any other, like, I know you did a big class for our community at the end of the year, but if there's anything that investors should be thinking about in Q1, maybe before tax season.
Yeah. So in our wealth building community, for anybody who's in there and hasn't already seen this, in the tax chat channel, I kind of did like an overview of the tax law and what you need to be thinking about potentially doing going forward. So check that out in the tax channel. Some people don't visit that channel very often in the community. But basically what's happening is prior to this change, crypto investors could have a universal wallet. So it didn't matter, the tax tracking was if you had 10 wallets, it could pull cost basis from one wallet and net it against, another a coin in another wallet. So there was this universal aspect, or what would you say, not a fungible aspect to crypto taxes.
Yeah.
Well, it's kind of like if I have Tesla stock in my Fidelity stock account, I can't use it, against Tesla stock in my Charles Schwab account. When I get my 1099 at the end of the year, it's per account, per broker, right? Schwab gives me one, and then Fidelity. So what the IRS is basically saying is crypto investors are going to have to do tax reporting and cost basis tracking on a wallet by wallet basis. So there's a lot of things around this, but main takeaway for everybody is to go check out your tax software that you're using for crypto and see if they've already integrated in a choice of doing wallet by wallet reporting versus universal reporting. So I know cointracker.io has already integrated this. You can go into your tax settings, you can choose wallet by wallet. You can put in your cost basis preference, first in, first out, last in, first out, all that. So some tax accounting software is more ahead of the game here than others. And there's still a lot we're waiting to hear from the IRS. So to be determined on that. And then the other thing is in your exchange, like Coinbase, you can go in and you can choose how you want your coins to be sold. So first in, first out, last in, first out. You can go in and you can choose that. So various stocks now, they're kind of trying to make the reporting like stocks, but crypto isn't like stocks. So that's an interesting thing because I don't know, maybe they're trying to force this. I don't know. But we definitely have to pay attention, and you're going to have until the end of this year. They extended the deadline. So you have until the end of this year to get your ducks in a row, get any coins that were prior on the universal method, get cost basis assigned, choose where you want those coins to be going in terms of which wallets will be their home. And a lot of people are starting to recommend have a wallet and only have one type of coin in each wallet. So a BTC wallet with only BTC, an ETH wallet with only ETH. I don't know how common that is for people to kind of have a bunch of different things in the same wallet or not, or Chris.
Well, I think what you mean is maybe like exchange account, or yeah, because I mean there's different wallets and different types of addresses for different coins. So yeah, this just adds another layer of complexity to it. Crypto taxes are my least favorite thing in the world to think about and talk about because they're just such a pain in the ass. And yeah, this definitely adds complexity. So for anybody that's just out there, kind of alone, it definitely makes sense to get a good CPA and maybe a financial advisor on your team to just help you navigate this stuff. So yeah, I start to fall asleep when we talk about it, but at the end of the day, you want to pay your taxes. You don't want to end up like with some big surprise bill. And it behooves you to like actually put the thought into it, as annoying as it can be. So it's good that I think we're bringing this up for people that have no idea about this change and just try to get ahead of it.
Well, a lot of people had no idea at all. And so a lot of my clients right now are actually going through and hiring somebody to redo all of their basis and just everything from the beginning. So that's an option too if it's just too complex, is to hire a CPA that will redo all of your bookkeeping for you.
Mm-hmm.
So,
Yep.
but yeah, we have to pay
All
more
right.
attention now and make sure things are done right.
And on that note, let's talk about what you guys are looking forward to next week, and then we'll start to wrap it up here.
Figuring out my cost basis on Fartcoin, of course.
Good man. Good man.
Yes.
Oh, we've got a really interesting month coming up in the stock market because we've got earnings season kicking off. Q4 earnings season kicks off here in a couple of weeks, and then we also have the Trump administration coming in and bringing in all that uncertainty on top. So there's going to be quite a lot happening. We're just going to have like tons of headlines every day, I foresee, for the next like month and a half. So it's going to be whipsaws and a lot of stuff, and I think we'll see some pretty big moves in certain things. And yeah, I think that's going to be interesting. And then of course we'll have all the normal stuff. Like we've got a CPI report next week, so that could throw some stuff into chaos, obviously, with more data coming out on the inflation front and what's going on with bond yields and the stock market. So yeah, we're just going to be dialed in like every day, every morning, just figuring out what's going on out there and what it means for our stocks and our portfolios.
Yeah, well said. Yeah, I mean, I'm just watching this 95K magnet. If we can get a big washout, great. If we break the all-time high, great. Part of me hopes we don't go into another like 8-month consolidation pattern. But if that's what happens, like what happened last year, that's fine, because the bigger the consolidation or the longer the consolidation, typically the bigger the move when you get out of that. And yeah, like we saw last year, 2 really, really big moves that happened just over the course of a couple of weeks. So the market will go slow. It'll bore everybody to death. And then when very little people are paying attention, boom, that's when the move happens. So that's why it's important just to stay dialed in. Nick, what about you?
What am I looking forward to? I am looking forward to a market correction if it ever comes. The start of one. I'm happy that at least we have the start of one. So we'll see. But I am going to be spending more time this year. At least this is my goal, is to really get back into my fundamental stock research again, because I kind of got pulled away a little bit last year. So this year I'm excited to get back into the charts, get back into the scanning, get back into the finding the diamonds in the rough, as we like to say. Yeah, that's kind of what I'm looking to over the coming months, weeks. Earnings season will be fun, as it usually is. Maybe a little bit more boring than normal, actually. This quarter could be a little more boring. What do you think, Trav?
Yeah, I don't know. Some stocks I think some will be for sure. Like some of the big tech stocks will probably be a snoozer because there's just not a lot of change happening in Q4 for them. But I think people are going to be really focused on guidance. And so like there can be like big moves off of what the companies are saying about 2025 and about what they expect under the new administration and things like that. So I think for some companies, it's going to be a potentially big market moving event. And for others, it's probably going to be a snooze fest for some. So what we may see is like early on in the earnings season, it may be a little bit of a snooze fest until we get into like really the heart of it, when we get a lot of like smaller companies reporting, mid and small cap companies reporting. And then there's one company in particular, I think, that's poised to absolutely smash their earnings estimates. And it's going to be a shocker. And I'm positioning in the portfolio ahead of that. So if you want to know about that one, obviously come join our community. But I'm really interested to see what happens around that, because I think it's going to be one of the biggest earnings beats we've ever seen.
Wow. Okay. I know when we were talking about it the other day, you had a lot of conviction, but you think it's going to be something mind blowing, huh?
I think the numbers are just going to shock people. However, there's always an unknown factor, which is how will the market react? Because there could be stuff like guidance that comes into play that maybe, even though the numbers are way off the charts for the quarter, the numbers for 2025, if management takes a conservative approach to guidance, then that could like temper the enthusiasm. Or, maybe there's a huge Trump event that happens on that day and it completely just, people just completely ignore what happens in this earnings report. So we'll see what happens. But I'm interested, very, very intrigued by the potential for this one. So
that stock may or may not be in crypto, I assume.
May or may not. I cannot confirm nor deny.
So you're seeing opportunity out there still.
Yeah, definitely. Yeah.
All right. Well, with that said, guys, we'll go ahead and wrap it up there. Thanks for joining us. Welcome back. we're looking forward to having another huge year in 2025. I hope you guys are too. So make sure you're subscribed to the YouTube channel. Leave us a review on your favorite podcasting platform and share this with somebody that needs to get their money life together and invest better for their future. So thanks for joining me, Trav and Nikki. And yeah, we'll see you guys next week.
Yep. Sounds good. Thank you.
Take care.